Good afternoon. From the floor of the CME, this is Chris Robinson with your Traders Exclusive comment for today, Thursday, the 5th of April. Well, the past 48 hours, we had some tremendous volatility in the grains and the livestock, not to mention the stock market. Yesterday, Wednesday, we had 1,000-point trading range in the stock market. All this came off of a final realization that there may be some pushback from China over our increase in tariffs on them. They came out with an increase in potential tariffs on corn, soybeans, cattle, lean hogs, what have you. So the market did not like that. The setup was kind of interesting, though. Let's start with the cattle market and the lean hog market. Cattle market had been in long liquidation mode anyhow. We broke about $25 off the recent highs, and that sell-off was kind of came to a crescendo yesterday, and then we found a bottom and rallied back very, very hard, about $7 or $8 off the bottom, and that rally has continued on today. Same thing for the lean hogs. Lean hogs fell to a 14-month low. Now, we had already been selling off since January. Yesterday's announcement just sort of put the icing on the cake and was kind of the culmination of everybody's fear. And interestingly enough, lean hogs have rallied. So the market's going to be very, very sensitive to whatever comes across on headlines, whatever comes across on tweets, what have you. But I think that the number one thing I want to talk about is the fact that it's given both hedgers and speculators tremendous opportunities. Most of 2016 and really all of 2017, we had very little volatility in a lot of markets, not a lot of movement. A lot of people kept saying, I can't wait till we get volatile again. So there's some movement, because whether you're a hedger or a speculator, movement represents opportunity to take profits on either hedges or on trades. So be that as it may, I think that the next 2 to 3 to 4 months, as we go back and forth on headlines, you're going to continue to see great opportunities and also great volatility. So how do you play that? You've got to make sure that you're disciplined. You can't turn into a cannonball trader where you think, all right, just because we've had a big move down, all I want to do is sell it, sell it, sell it. You've got to make sure that if you've got a profit in a position, that you have protective stops. So if the market reverses, you don't leave all those profits on the table. It doesn't matter if you're long. If you're long and the market's rallying with you, you want to make sure you have sell stops. If you're short and the market's breaking and you're making money being short, you want to make sure you have buy stops. So if you don't know what I'm talking about, if you don't know what a buy stop is or a sell stop is, if you're trading futures, that's a very important thing to understand, because it allows you to stay disciplined and also not allow profits to disappear when markets are very, very volatile. Switching over to the grains, obviously the impact was really most felt in soybeans. Soybeans in 2 days dropped 60 cents. Yesterday we fell from new crop soybeans had been around 10.60. We fell below $10. We went down to 9.97. Now, as I'm sitting here talking to you now, we're trading back around 10.20, 10.30 again. So the market has rebounded, and in response to people kind of panic selling. I think moving forward, you've got to make sure, again, that you are rewarding. If you're a producer, don't let $10 beans get away from you. If you're a producer, do not let $4 new crop corn get away from you, because we saw in the last 24 to 48 hours how these markets can really wipe out what you think are really good profits. So that's my thought for the day. Make sure you're doing something to manage your positions so that you don't let good winners turn into losses. Well, that's about it. This is Chris Robinson from the floor of the CME. If you're looking for help with your trading or your hedging, give me a call. I'm online. Have a great day.